People, listen to me. If you are retired or you are staring down the barrel of retirement just a few years from now, we need to have a serious, multi-million-dollar talk right here, right now. Because when you enter this phase of life, the financial rules of the game change completely. Your paycheck stops, and your savings, your nest egg, your fixed income, that is your lifeblood. Every single penny matters. Every single decision you make can either secure your future or completely devastate it. Lately, I've been hearing a lot of buzz from people in your exact shoes asking about a tech platform called Lenme. You've seen it on your phones, you've heard people talk about peer-to-peer microlending apps, and the title floating around is Lenme Borrowing Guide. People want to know, is this the modern, clever way to bridge a temporary cash gap without breaking the bank? Or is it a financial trap doors waiting to swallow your hard-earned security? Today, I am going to give you the cold, hard, undeniable truth about using a peer-to-peer app like Lenme when you are a senior on a fixed income. First, let's understand what this actually is, because you must never, ever put your money into something you do not understand. Lenme is not a traditional bank. It is an app, a digital marketplace. It connects people who need to borrow small amounts of money, usually anywhere from $50 up to $5,000, with individual investors or companies who want to lend that money to make a profit. You go into the app, you say, I need $500 for an unexpected medical bill or a car repair, and then lenders compete by offering you different interest rates. No paperwork, no traditional hard credit check, and they promise you can get the cash quickly, sometimes the very same day. On the surface, that sounds like a dream come true, doesn't it? It sounds like the answer to your prayers when you are hit with an emergency and you don't want to touch your retirement accounts. But I want you to pause. I want you to take a deep, deep breath, because we need to talk about the underlying fear that drives people to look at these apps in the first place. The biggest fear facing retirees today is outliving their money. It keeps you up at night, doesn't it? You worry about inflation eating away at your purchasing power. You worry about a sudden market drop devaluing your 401k, and most of all, you fear the unexpected. You are living on a fixed income, maybe it's just your Social Security check and a modest pension. Everything is perfectly budgeted down to the dollar. But then, life happens. The air conditioner breaks down in the middle of July. Your dental insurance refuses to cover a root canal. Your car needs a brand new transmission so you can get to your doctor appointments. It causes a level of stress that you do not need and should not tolerate at this stage of your life. So, what is the actionable takeaway here? What is the Susie Orman-approved guide for navigating this situation? My standard, unwavering rule for you is this: borrowing your way out of a retirement cash shortage should always be your absolute last resort. Do not let tech convenience blind you to financial risk. If you are faced with a sudden emergency expense, before you ever download an app like Lenme, I want you to exhaust every traditional, safe alternative available to you. First, look at your local community resources. Many counties and nonprofit organizations offer emergency financial assistance, utility grants, and low-cost repair programs specifically for seniors and retirees. They want to help you stay secure in your home, and that money doesn't come with interest rates or monthly subscriptions. Second, if you absolutely must borrow, look at a local credit union. Credit unions are member-owned, not-for-profit institutions. Go in, sit down across a desk from a real human being, look them in the eye, and explain your situation. They often have small-dollar, short-term emergency loans with interest rates that are strictly capped by federal law. You will get a clear, transparent structure, and you will have a human being to talk to if you need to adjust your repayment plan. Third, if you have a Roth IRA, remember that you can always withdraw your original contributions at any time, for any reason, completely tax-free and penalty-free. It is your money. If you must use a traditional retirement account, calculate the exact tax hit first, but realize that paying a one-time tax on your own money might still be vastly cheaper and safer than taking on debt to an anonymous online lender. Now, if you have weighed all of those options, and you still decide that a peer-to-peer platform like Lenme is the path you want to take, then you must follow these rules of engagement to protect yourself. Rule number 1. You only borrow the bare minimum of what you absolutely need to cover the immediate emergency. If your car repair costs $400, do not request $500 just to have extra walking around money. Every extra dollar you borrow is a dollar you have to pay back with interest using your fixed retirement checks. Rule number 2, do not set a repayment period that stretches out for months and months just to make the monthly payment look small. The longer that loan hangs over your head, the more interest you are burning, and the longer your retirement security is compromised. Get in, pay it off as fast as humanly possible, and get out. Rule number 3, turn off any automated features like balance guard or automatic cash advances unless you have calculated exactly how much they cost. You do not want an algorithm deciding when to take out a loan on your behalf. You must maintain absolute, total control over every single dollar that enters and exits your bank account. Listen to me closely. Your financial freedom in retirement does not come from how easily you can borrow money. Your freedom comes from how little you owe to anyone else. Debt is bondage, and when you are retired, debt is a direct threat to your independence. Do not let the ease of a 5-minute smartphone application trick you into compromising the financial fortress you spent 40 years building. Stand powerful in your choices, protect your cash flow, and keep your retirement secure. You can do this, and you must do this.